Hello, everyone. Welcome back. Time for another episode of On My Mind. This episode is going to be a little bit different. I don't have anything in particular, any event or anything that I really want to talk about in specific terms, but I want to make some general comments how where the industry is gone, where it is now from where it used to be just a few decades ago. What I think is quite amazing is that we are now reached a point that LNG is becoming like any other commodity. It's almost getting a little bit boring. And I think that's good. We just had this couple of big conferences. I missed the LNG conference in Doha, but I've been reading up on what happened. And really nothing significant happened. A new few projects here and there, a few announcements, a few sales contracts, but very normal behavior. We've gone through a period of some cold weather in the US and in Europe, and the prices went up, the prices came down, no real dramas. What does that mean? Does that mean that we are now becoming normal? We're becoming like every other commodity? I think it does. We've come a long way from LNG a few decades ago, where it was controlled by a very few number of players with very opaque pricing, very opaque terms, supply controlled by a number of companies, many of them state owned, buyers basically dictated by terms set by the Japanese, and the rest of the world pretty much followed those terms. No trading, no involvement of people like Vitol or Glencore, any of the middlemen. It was point to point sales, long term contracts, very stable, not many players, kind of boring. Then he went to this craziness where suddenly the game opened up, bunch of new players came in. It's really the US. We have to give the US a lot of credit because of the US industry. The market got shaken up. Without the US, we probably would not have had this. The US showed there's different ways, different models, commercial models. We could do tolling models. We can be unintegrated. We do not have to have the LNG producer own the resource. It can be independent entrepreneurs like myself, which was completely unheard of in the 90s and even 2010s till Cheniere did it the first time. Before that, it was considered only the Shells and the Totals and the Exxons and the Qataris, and a few other people had the wherewithal and the financial and the technical and the commercial skills to put this together. And the US changed all of that. And once that shakeup happened between, let's just say, around 2015 to 2025, we went through a bit of a turmoil. We went to some peaks and troughs. The world had a few shocks. We had a period where American LNG was out of the money. We had to shut in. People say it was bad, looks bad for America. I say it was very positive because American LNG contracts allowed buyers to shut in. Before that, there was no flexibility to do that. And so that was a period till about 2025. And now we're entering the next epoch, the next decade. And LNG is just becoming like any other commodity. We have seen a growing number of players, suppliers, buyers, middlemen. Traders are now controlling a lot of the market, a lot of the flows. It's unheard of that people like Shell and Total are now publicly saying they don't need to own the plants, the export facilities. They can just buy the output and trade it. And that was a model that was literally created by the trading companies who before then had no access to supply, so they couldn't really trade. Once the producers in the US started selling supply to the trading company then became players because they could then resell that LNG. And suddenly the Shells and the Totals of the world and the Exxons of the world realized that there was a lot of money to be made in trading. And maybe they were not always the best people to put together big projects and tie up their capital and paint everything three shades of yellow. You know, when an entrepreneur builds an LNG plant in the States, when I do it, I don't really have to follow the Shell protocols on terms of, what has to happen. We can just follow the permitting safety qualifications and listen to the advice of our technical providers. We have access to the same technology that Shell does. and Exxon and any other player. So suddenly it became very democratized. Anybody could really get in the game. You did not have to own your own resource. Of course, in most parts of the world, that's a constraint because there's not that much gas lying around for independent players to pick up. I'm in Australia. There's not. It's impossible to put an independent LNG project here because there's no gas available for independent players. You have to go with the players that already have the gas or piggyback an existing plant and leverage the capital that's already been invested. But it's very hard for an independent player to put together a brand new LNG player from start if you don't already own the resource. So the US and Canada have a bit of a unique example that in the player, the exporters do not have to own the resource, but it has now made an industry quite open. We have new players, new entrants come in of every type. People that are reselling the gas, people that take LNG and then they're taking it to different places, etc. And I think that just shows that we are now maturing. But what's very exciting is the market is now listening to demand, supply signals to determine price. In the past, price was kind of independent. You set a price related to the price of oil, 15, 12, 13% of oil. And really, the individual demand supply signals of LNG made no difference because the price was linked to oil and the oil price was not always linked to the gas price or the price in the market. Now we are seeing these signals happen. It gets cold in Europe, prices go up. Prices go up, more production happens in the plants that can. It gets cold in America, feed gas price goes up. Feed gas prices then compete for LNG feed gas, city feed gas, LNG feed gas, and LNG cost a bit more. These are all normal commodity signals, which I think is great. That's the way it should be. The consequence of this, now we have a lot more discretion and discipline on projects. Does the project make economic sense? We have seen projects get cancelled more than ever before because the players, the sponsors decided it doesn't make sense to do those projects. Lake Charles is a great example where in the US it's been on the books for 15 years and now it looks like it might be killed. And that's because the owners decided they maybe use a terminal for something else. So these decisions were harder to make when the price signals were not obvious. Now we have more obvious price signals and people can make economic decisions. Obviously, price matters a lot to demand. There's a great McKinsey report that just came out this week discussing some of the trends in LNG. They did a buyer survey. It's called a buyer survey report. And it basically says, surprise, surprise, if the price drops, then the buyers will want to buy a lot more LNG. That means there's capacity to do so. In the old days where you were building an LNG receiving terminal to receive gas from a specific plant, you didn't have that extra capacity that if you could the price drop, you could take more. You would everything was in what they call the invisible LNG chain. The pipeline was there. The LNG chain was very strong. Now, hey, if the price is cheaper, the buyers will buy more. If the price, they say, if the price drops below $8 in Asia, we switch from coal. That is great. That is exactly how a commodity market should work. Price is determined by demand supply signals, and everything kind of works more efficiently. So the efficiency is what we're trying to get at. I think if we can get to the efficiency of oil, we'll be really improving the state of the industry. We will have a lot more buyers, a lot more sellers, and everybody will have a price that they can trust. That price discovery is very important. I think what is still lacking in our business is that there is still not enough price discovery. We still don't exactly know the price of that cargo going into Japan yesterday. We have a pretty good idea what the price of oil of that tanker going into Japan yesterday was. So we need to get more transparent. Lots of people have tried, people like Platts and other people, price reporting services. But in the end of the day, we all lose if price is not more transparent. Having opaque pricing just makes it harder. It would be absolutely wonderful if Japan or Korea starts publishing the price of the cargo that enters immediately, as opposed to a few months or a 30-day delay. Just like you have to report it in your taxes, your customs, what is that price of that cargo? Let's have that transparent. We will know the exact market price. We don't have to use proxies like what Platts tries to figure out. And this is information that will be beneficial for everyone. There's a lot of talk about do these importers or exporters pay fair taxes, and part of it is because there's a lot of gains with transfer pricing you pay. If I have a subsidiary in Singapore and I'm an exporter, I'll export to the subsidiary in Singapore at a low price, and that subsidiary in Singapore then re-exports at a high price, and the taxes then get paid by that entity and not by the exporting entity, and that could be a much lower tax rate. So these all things add inefficiencies to the system. I think there's still evolution to be had where we can make LNG more efficient. We still have a lot of restrictive contracts, restrictive destination, lots of non-disclosure on prices. All of those things don't exist much in some of the other commodities. I think we need to get there for LNG, but I'm very confident that we are heading that way. And it happens naturally as a number of players in any industry goes up. As more and more people are involved, it's harder to keep secrets, obviously. So that's great. I think that's a good trend. Project economics absolutely matter. We need to be able to hedge LNG prices a little bit better, make those financial decisions, ideally have banks who are accepting of not only long-term but also short-term contracts. Banks are still hung up. If I do a project finance, they want to see a long-term 20-year contract with Tokyo Electric. Well, that's the old way of thinking. What about a 5-year contract with Colombo Electricity Company? That should have some value as well in my project financing. But right now, I don't think it does. We need to say buyers want a mix of long term and short term. Sellers want a mix of short term and long term. It's the bankers that are still stuck on insisting on long term. There is a mismatch here that has to change. I use the example all the time, but if I was building a refinery, and I can get project financing for that, I don't have to show a 20-year contract for someone to buy my diesel at a fixed price. I do not have to do that. They have to just look at, hey, is my refinery efficient? Is it going to compete with all the other refineries in the region or wherever I'm going to export to? Is it going to make the right type of fuel? I'll give you the financing. I don't have to have a buyer promising to buy my diesel at exactly $80 per liter, whatever it is, per barrel, whatever it is. That's we still are stuck in that world in LNG. I'm looking for that change. We still see a lot more government interference than I would like to see. I think governments have an important role to play. They are the regulator. They're also the tax authority. The industry has not done justice. They play a lot of games with all of this. We don't pay our fair share of taxes. A lot of maybe in the US, maybe there's some tax breaks, but in other countries, there's a lot of games that are played with transfer pricing, etc. I think the government should get more strict about that and spend more time on collecting the taxes as opposed to over-regulating and trying to overthink these things. I see projects like a Tanzania, because of the government, negotiations and the lack of trust between the project developers and the government. That project has, discussions of the project have dragged on for a decade. Are they going to get there now? I don't know. But the point is, there's a lot of lost revenue in the meantime. And yes, you can argue that, the gas is still in the ground, so nothing is lost. I would say that's not exactly the case, because in the end of the day, we would have found more gas if the projects were successful. So the government interference still has to go. Buyers are looking for flexibility. That's what the McKinsey survey said. They want flexibility in pricing, flexibility in terms, flexibility in suppliers, and they want reliability. We, as sellers, should be focused on that. If we can make these things to match, this industry will take off even more than it has. So I think that's a positive message. The last thing I want to just talk a little bit about is AI. I've just started playing a bit with AI, and I encourage all of you to do that. I actually just put in a model SPA, LNG SPA, into one of the learning and the models, a model SPA, like the AIPN, AIEN model, and I asked it to tell me the risk. And it was pretty astounding how good the responses were. So I think AI is going to be disruptive in our industry. It's going to be disruptive for the legal sense. We have a lot of lawyers who make a lot of money on our, on contracts. That's going to be more standardized, I feel. AI is going to have a role to play. AI is going to make a massive difference on shipping. In the end of the day, LNG shipping is still relatively inefficient. I would venture to say a lot of people are still using Excel spreadsheets and things like that on loading windows. AI can integrate weather and ships and locations and cargoes and contracts all and give the most efficient use of the assets. I think AI is going to make a massive difference in loading, unloading, ship scheduling, all of that kind of stuff. AI is going to make a huge difference on trading. The reason trading has taken off is because there is an asymmetry of information. Someone knows information, the other person does not. The intermediary is willing to take that risk because of that information that they know. They're willing to buy long term and sell short term because they have a buyer in Bangladesh that the seller in the US may not be willing or be aware of. As this industry becomes more efficient, as more and more information is in the system, it's not today, we don't have good pricing information in real time. As that develops, AI is going to really take over the trading function. I think that if I was a trader out there today working for any of the trading companies or any of the portfolio players, I would be learning AI very, very efficiently, because from what I've seen of AI and the things that I've played with, AI can integrate information, at a quantum level much more than a human can. And traders base everything on information. And if AI can do it more efficiently than a trader can, then maybe the trader's role is limited in the future. I think the trading companies will still be there. There may not be individual human traders as much as AI is going to tell us everything, especially if they can integrate ships, integrate production, integrate feed gas into LNG plants, integrate weather, integrate prices. Suddenly, it's not a complicated thing for AI to tell me which ship should go where and how much margin can I make. For that, we need flexible contracts. We need more looser terms. We need more standardized LNG qualities. We need standardized contracts. We are getting there. I'm very excited to see where the industry's come for the last 10 years and where it's going to go for the next 10 years. Hope that was an interesting little episode. Thank you.